What's up, traders? My name is Layla, and welcome back to this week's no-nonsense market recap from Bullish Bear. U.S. markets delivered a rollercoaster week as investors balanced optimism over the end of the historic government shutdown with a mix of corporate earnings and shifting economic signals. The Dow reached a new record high midweek before stocks paused Thursday, with gains led by healthcare, energy, and consumer staples offsetting weaknesses in tech. The 43-day government shutdown officially ended Wednesday after the House passed a funding bill signed by President Trump, restoring pay to federal workers and funding key programs through January. The resolution gave Wall Street a sigh of relief, boosting risk sentiment across the board. Gold jumped to a near 3-week high, oil and other commodities rallied, and Treasury yields fell to their lowest level since late October as investors rotated back into equities. Earnings season kept up its momentum with 91% of S&P 500 companies now reporting and about 81% beating estimates by an average of 7.2%. Tyson Foods climbed after posting stronger than expected results, while Diageo soared after appointing former Tesco CEO Dave Lewis to jumpstart growth. Disney, however, slipped 7% despite streaming gains as weak TV and theatrical revenue weighed on results. In tech, Cisco and AMD both climbed after upbeat guidance tied to AI-driven growth. Meanwhile, Nvidia, Oracle, and Marvel pulled back following reports of SoftBank trimming its Nvidia stake and fresh supply chain concerns at CoreWeave. Tesla stock swung wildly, dropping after shareholders approved Elon Musk's $1 trillion compensation plan, but recovering earlier in the week on renewed optimism for stronger Q4 sales. Wedbush analyst Dan Ives summed it up the best, saying being a Tesla bull takes patience, but the payoff could be massive. Crypto and AI buzz made a comeback with Bitcoin, Coinbase, and MicroStrategy all rallying as investor risk appetite improved. All the while, a firm CEO Max Levchin reassured skeptics at the Yahoo Finance Invest conference that it's not coming for our jobs and it's here to help us live better lives and accomplish more. All meaning to say workers shouldn't fear the rise of robotics or AI. In corporate standouts, Firefly Aerospace soared on record revenue growth, Nike rallied after a bullish analyst upgrade, Dollar Tree slipped on a downgrade, and Oklo jumped on renewed nuclear optimism despite operational delays. Apple grabbed headlines by cutting App Store fees from 30% to 15% for some developers. Meanwhile, FanDuel announced its own prediction market app, ramping up competition in the digital gambling space. On the policy front, President Trump proposed a $2,000 tariff-funded payout to Americans, and the Senate introduced a bipartisan bill aiming to define U.S. cryptocurrency market rules, a potential game changer for digital assets. With risk sentiment improving, the focus now shifts to the Fed's December 10th meeting, where markets are pricing about a 50% chance of a rate cut. Despite lingering uncertainty, Wall Street ended the week with a cautious but growing sense of optimism. The shutdown is finally over, earnings are exceeding expectations, and investors are betting big on AI, robotics, and crypto to drive the next leg of growth. For more updates, tune in next week as we continue to track the market's every move, and subscribe down below to Bullish Bear for more market recap videos. Until next time, stay disciplined, manage your risk, and remember, bears make money, bulls make money, but pigs get slaughtered. See you in the trading room.